Good morning, ladies and gentlemen. Welcome to the Vietnam Enterprise Investments Limited Annual General Meeting. Throughout today's recorded meeting, attendees online will be in listen-only mode. The AGM will commence momentarily.
Yes.
Tôi nghĩ rằng là trong thời gian tới thì thị trường chứng khoán của Việt Nam sẽ rất là hấp dẫn, bởi vì là tôi thấy rằng là có hai lý do chính. Thứ nhất là về tiềm năng tăng trưởng của GDP của Việt Nam rất là hứa hẹn trong những năm tới, và có những cái dấu hiệu rất là quyết liệt từ phía chính phủ.
Vietnam is clearly at a crucial point in its development. This very open economy faces obvious challenges, not least from a volatile geopolitical and trade environment.
Besides the challenge from the global headwinds, for example, the Trump policy, we also see there's a challenge for the Vietnam is overcome the middle income level in the
middle income trap.
Yeah, middle income trap in the coming time.
The biggest challenge is the ability of the public sector to keep up with demands that come from the unleashing of the private sectors. How the country tackles this process is going to set the direction of travel for the next 20 years.
Vietnam, the last of the industrial dragons, appears to be at a crossroads between frontier and emerging market, striving to ascend the value chain and avoid the middle income trap. Challenges and opportunities are many and varied.
Ladies and gentlemen, shareholders, board members and guests, I'm going to start with the most exciting thing, which is the emergency exits. I've always wanted to do this. They are at the back and on the right and on the left. So if there's any problems, that's where you go. So welcome to the 2025 Annual General Meeting of Vietnam Enterprise Investment Limited. On behalf of the board, thank you for joining us today, whether in person or virtually. I would like, first of all, to introduce you to the board members who are here today. I'm Sarah Arkle. I took over as chair of the board at the beginning of July last year. Charles Cade is first on my left, our senior independent director. And I would like to introduce Eddie Girawat, who joined the board in March this year. Eddie has an in-depth knowledge of the region, having held a number of key investment roles in Asia, including a 14-year tenure at Temasek in Singapore, where, amongst other responsibilities, he covered Vietnam. On the line, we have Sukling Loh, who chairs the Audit Committee, and V. Peterson, who chairs the Nomination and Remuneration Committee. On the podium, we also have Lisa Hayward, who is acting as Company Secretary for the meeting. I'm going to leave the more detailed comment on Vietnam's macroeconomics to Dominic Scriven, who I'm sure you will know, who is the founder of Dragon Capital and also a director of Vail. However, I do think it is worth pointing out that despite a number of global challenges that we've had over the last few years, Vietnam's economy has shown remarkable resilience, with an average annual GDP growth of 6% over the last decade. We have been particularly encouraged by the supportive government reforms and increased infrastructure spending following the appointment of the new General Secretary last year. And this should support Vietnam's economy as we all face the uncertainty of US tariffs and other global issues. I think one of Vietnam's most impressive macroeconomic statistics is that the government's debt to GDP is only around 34%. This is obviously an extremely enviable position compared to the UK and other major global economies. What wouldn't Rachel Reeves do for numbers like that? This, coupled with Vietnam's young, highly educated population, should support further strong economic growth going forward. However, despite the strong economic fundamentals, there has been persistent foreign selling of the Vietnamese stock market, $3.7 billion in 2024, and the latest figures show there's a further $1.5 billion since the beginning of 2025. This has meant that foreign investors have been selling shares in leading high-quality large-cap companies, which are at the core of Vale's portfolio. And this has resulted in Vale's NAV underperforming the Vietnamese VNI index year to date. Tuan Le, Vale's lead fund manager, will expand further later on. But I would just like to reiterate that the directors believe that Dragon Capital's well-resourced and experienced research team and its disciplined investment process should enable the company to outperform over the medium term and benefit from having exposure to some small-cap companies and IPOs when IPOs return to the market. Now, the issue that has obviously been concerning the directors most over recent months has been the persistently wide level of the discount. As a board, we continue to explore all appropriate options to enhance shareholder value and have taken a number of measures. The board has significantly increased its buyback program, buying back 8.4% of its outstanding shares in 2024 and 4.25% year to date, which is 3 times the rate of buybacks in 2023. This has led to an accretion in the NAV of 1.8% in 2024 and almost 1% year to date, which more than covers the management fee, which was lowered to 1.5% from the beginning of July 2024. Whilst the directors firmly believe that Vale should outperform over the medium term, in March this year, we introduced a 100% 5-year performance-related conditional tender offer for the period to the 31st of March 2030. The purpose of this proposal is to provide reassurance to shareholders that the company is committed to delivering performance that meets or exceeds its benchmark, but this also allows shareholders to realize up to 100% of their investment if the NAV underperforms the relevant benchmark index. The board has also been taking measures to raise the profile of the company in an effort to diversify the shareholder base and increase demand for its shares. The company has upgraded its website, appointed a new PR firm, and enhanced investor engagement through our work with H2 Radnor. The company introduced a US dollar share class to facilitate investment from US dollar-based investors. Dragon Capital have also recently opened a London office and strengthened their marketing resources, including the appointment of Tuan as a new product specialist in London. As I noted in my statement in the annual report, the board may consider further steps to meet the medium-term objective to narrow the discount to 10% or less if it considers it in the best interests of shareholders to do so. Thank you, and I now call the meeting to order. As I mentioned, Lisa Hayward from Dragon Capital will act as secretary of the meeting today. Since it is now past 12 p.m. and I am informed that there is a quorum present in person or by duly appointed proxy, I declare the meeting open. All shareholders should have received the notice of the meeting setting out the agenda for today's annual general meeting, and I will take this as read. All shareholders should have received a copy of the company's annual report, including the audited financial statements for the year ended 31st of December 2024. And of course, a copy is available for download from the company's website. As chair of the meeting, I have been appointed as proxy for Computershare Company Nominees Limited, representing 135,258,099 shares. The proxy votes received in advance of the meeting today will be taken into account in the final tally, and the company will announce the full results of each resolution in an RNS to be released to the market later today. Before I turn to the matters set out in the notice of the meeting, the board would like to give shareholders the opportunity to ask any questions about the business of the meeting. Please note that you will also have an opportunity to ask any questions about specific resolutions as they are proposed. If you have any questions, please raise your hand. Okay. If there are no questions, we will now move on to the formal business of the meeting. This year, there are 10 proposed resolutions, as detailed in the notice of the meeting dated the 13th of May 2025. Each resolution will be voted on by poll. Please note that votes will be tallied separately for each resolution, but collected in one process after all of the resolutions have been formally proposed. Resolutions 1 to 8 are the ordinary business of the meeting. Each of these is proposed as an ordinary resolution, which means that in order to pass, they require the approval of more than half of shareholders present and voting, either directly or through representatives. Resolutions 9 and 10 are the special business of the meeting. Each of these is proposed as a special resolution, which means that in order to pass, they require the approval of not less than 3/4, i.e. 75% or more, of shareholders present and voting, directly or through representatives. Resolution 1 is to receive and adopt the audited financial statements of the company for the year ended the 31st of December 2024, together with the auditor's report and director's report, the 2024 annual report. To that end, I lay before the meeting the 2024 annual report, which has previously been distributed to all shareholders. Are there any questions in relation to this resolution? I now propose Resolution 1 as an ordinary resolution. Voting will be by way of poll, to be conducted in a single process after all of the resolutions have been formally proposed. Resolution 2 is to reappoint KPMG Limited of Vietnam as auditors of the company and to authorize the board to fix their remuneration if passed. Are there any questions in relation to this resolution? I now propose Resolution 2 as an ordinary resolution and put it to the vote by way of poll. We now turn to Resolutions 3 to 8, which deal with the elections and re-election of the company's directors. Resolution 3, which is an ordinary resolution, is to re-elect myself, Sarah Arkle, as a director of the company. Are there any questions in relation to this resolution? I now propose Resolution 3 as an ordinary resolution and put it to the vote by way of poll. Resolution 4 is to re-elect Charles Cade as a director of the company. Are there any questions in relation to this resolution? I now propose Resolution 4 as an ordinary resolution and put it to the vote by way of poll. Resolution 5 is to re-elect V. Peterson as a director of the company. Are there any questions in relation to this resolution? I now propose Resolution 5 as an ordinary resolution and put it to the vote by way of poll. Resolution 6 is to re-elect Sukling Loh as a director of the company. Are there any questions in relation to this resolution? I now propose Resolution 6 as an ordinary resolution and put it to the vote by poll. Resolution 7 is to elect Eddie Jetjarawat as a director of the company. Are there any questions in relation to this resolution? I now propose Resolution 7 as an ordinary resolution and put it to the vote by poll. Resolution 8 is to re-elect Dominic Scriven as a director of the company. Are there any questions in relation to this resolution? I now propose Resolution 8 as an ordinary resolution and put it to the vote by way of poll. Resolution 9 is a special resolution to vote that the company be generally and unconditionally authorized to make market purchases of its ordinary shares. Are there any questions in relation to this resolution? I now propose Resolution 9 as a special resolution and put it to the vote by way of a poll. Resolution 10 is a special resolution to vote that the company be wound up effective on the 31st of December 2027. The company is obliged to put this resolution to shareholders in accordance with the company's Articles of Association. In the notice of AGM, the company had recommended that shareholders vote against Resolution 10 for the reasons set out in that notice of AGM. Whilst the company does not expect Resolution 10 to be passed, based on proxy votes received, we believe that most of the votes in favour of Resolution 10 were centred on a small number of sizable shareholders. In accordance with the board obligations under the AIC Code of Governance, the board commits to consult with relevant shareholders in order to understand the reasons behind their voting decision, with a view to providing an update within 6 months, as required by the AIC Code. Are there any questions in relation to this resolution? No. I now propose Resolution 10 as a special resolution and put it to the vote by way of poll. As noted, all resolutions will be voted on by poll. This means that each shareholder is entitled to 1 vote for each share registered to their name. Abstentions will not be counted. Shareholders who have already voted prior to the meeting should not complete a poll card unless they wish to change their vote, in which case they must inform Lisa Hayward on the proposed changes. I otherwise ask Lisa to now distribute poll cards to any shareholders or their representatives present who have not already voted. So if you haven't already voted, please can you get in touch with Lisa. Please complete your poll card indicating your vote for each of the proposed resolutions. When completing the card, ensure that you have placed a cross in the relevant boxes on your poll card and that you sign and date the card. If you do not know the number of shares you hold, this may be left blank. In any event, the details will be checked against the company's share register. As I mentioned earlier, the full results of the poll will be announced by the company later today via RNS. However, based on the proxy votes received before the meeting and the level of shareholder representation in the room, the board expects that Resolution 1 to 9 have been passed and that Resolution 10, the discontinuation resolution, has failed to pass, meaning that the company will continue in existence. Thank you, shareholders, for your attendance. This concludes the formal components of the 2025 AGM. I will now hand over to Dominic Scriven, founder of Dragon Capital and director of Vale, to talk about the outlook for Vietnam, and we will all take questions at the end of the presentations. Thank you.
Thank you, Sarah. That was an extraordinarily articulate piece of demagoguery. Shareholder democracy in action. Thank you very much. Sarah, fellow chair of Vale, fellow directors, all of you here today, offline, and indeed all of you online. It's a great pleasure to be here, and welcome to our AGM. You'll see up here, there's a bit from me, there's a bit from my colleague Tuan, who's over there, more on the portfolio, and then there's Q&A. And I'm informed that no later than 1:15, we're all invited to lunch. And I hope you will, if you're free, stay for lunch. So how to provide some background and context for today? You know, the 2 words that keep coming to me are terror and wonder. And if you look around the world, there's plenty of terror, and luckily there's still plenty of wonder. And we have a bit of both in Vietnam. We'll talk about those. But more importantly, for the moment, we have peace, we have food, and we have growth. And those are 3 things that I wake up every morning being very grateful for. The context of what's going on in Vietnam is a country of growth, as you know. But it's been a little bit disappointing. It's been testing for those who follow its financial markets in the last few years. As Sarah noted, foreign investors have been selling, domestic investors have been buying, but really there's been some issues of credibility and enthusiasm from the foreign investment community. And those, of course, have affected us in Dragon and with Vale. So we really want to cover those issues today as well. I should say that in addition to the Vale board, we've also got a crew from Dragon here. So there's the CEO of Dragon, Bayat, who's been there 7 years. There's Nick Roberts there, who's an independent director on the board of Dragon. There's Rachel, Tuan, and Steve from our London office. Martin, who acts as a sort of secret agent, as well as Lisa, who's a less secret agent, and Will, who is head of our client-facing activities. So, this is the first terrible slide, isn't it? Vietnam has been a victim of its own success. Has over $100 billion trade surplus with the United States. That's number 4. And of course, President Trump imposed a notional tariff of 46%. Negotiations for that are ongoing at the moment. The bad news from today, as I think many of us would have read, is that Japan, which everybody's expecting Japan might be the front runner in trade and getting a deal of some sort, has actually failed because the US refused to give a bit of a carve out on Japan's auto exports. So this is really all up in the air, and we can talk about that in the Q&A, frankly, if we would like to. But the point of this slide is it's been really a victim of its own success. The issue is a big one, although please bear in mind that Vietnam exports $400 billion. So this is, about 30% of Vietnam's exports. But overall, of course, many of you have visited Vietnam. You'll know it's 100 million people. It's really a domestic story. So we've had, 7% growth the first quarter. The stock markets, the best performer of the Southeast Asian markets, and there's been good flow-throughs in terms of foreign and domestic investment. But within the economy, what local politicians and local players, and in particular the Communist Party, have been looking at is what's going wrong domestically. And here are three examples of this. So it's taken 15 years to build the first metro line. People are going, why has it taken so long? I know in the UK we have certain periods to build infrastructure, but it ought to be quicker in places like Vietnam. We have legal bottlenecks that have locked up over 2,000 projects of one sort or another. And capital, people, resources is bedded into those projects. They're not moving. And we have a very convoluted logistics system, which means that logistics costs are 20% of GDP versus 10% of GDP most other places in the world. So if you ask the leadership of the Communist Party, they'll go, this is more important than the trade war. Hopefully not stuck on that slide. Sorry for, wait, yes. Yes. So we need to tackle the trade war. So some of you may have read that, the Trump organization got very swift approvals on its proposed $1.5 billion resort investment in Vietnam, a project that was approved in 3 months, unlike what most of the rest of us have to do. Elon Musk, now of course no longer part of the family, but Elon Musk's satellite system is the only system that's been allowed to operate telecoms free of all permits in Vietnam. We've had big numbers of commitments on US purchases. We've had a cut on tariffs for the US, and this is an important one, we've had tariffs imposed on Chinese exports. So one of the big concerns is that China is using other economies to transship its goods. And this is one of the ways that Vietnam's showing it's being proactive in addressing US concerns. In fact, more generally, the success of the Vietnamese economy is directly as a result of China having some issues that it needs to deal with in its own economy. And so leaving a team that's energetically in Washington, the government is focused on 5 years, as of course we are here today. And there's a range of objectives underway, targeting GDP, which is now $500 billion, reaching $800 billion in just 5 years' time. Tackling private sector efficiency and infrastructure modernization. And Tuan later will be talking about how these are reflected in the Vale portfolio. Significantly, 2 months ago, the General Secretary of the Communist Party came out with a statement that the private sector is 51% of GDP. Now, that's important if you think about it. The chief of the Communist Party of Vietnam acknowledging that the private sector is the majority contributor to GDP. And furthermore, there is a recent resolution called Resolution 68, which has this 51% increasing to 60 and over 60% by 2030. So how are we doing that? Well, you know, Vietnam is long on big images, big promises. What is actually being happening at the time? Well, we've had a squashing of the number of ministries. We've had a halving of the number of provinces. Many of you might appreciate Vietnam is a great map-making nation. This is the number of administrative provinces that existed 1 month ago, and this is the number that exists now. And together with this squashing of ministries and removal of administrative layers of government, it's expected that over 1 million people will be released from the public sector payroll, and that the savings that will be made available to tackle some of these other infrastructure projects. It feels a bit like what Elon Musk was trying to do in Washington, although, of course, we need to remain at it, unlike Elon. A familiar story for those who follow us is Vietnam. We heard it, I don't know if anybody heard David's film talking about the railway that used to take somewhere around 2 days to get from north to south. This 1,500 kilometer railway is being bid by 3 or 4 people at the moment. The latest bid is $60 billion and completion time in 7 years, and reduce the transportation time from one end of the country to the other to, I think, 5 or 6 hours. We've also got about 1,000 kilometers of high-speed highway being built and delivered every year, and a ramping up of the metro network. So the infrastructure is underway. If we turn more to the domestic economy, this is a comment on the real estate sector. So in Vietnam, when people launch real estate projects, they do it in big auditoriums, slightly bigger than the Stationers' Hall. And after a few slow years, this was the launch of a residential project 2 months ago. 3,000 people crammed in and 2,500 sales marked in the day. So this is a recovery of confidence in the real estate sector. And that's the outlook we have for this year. So here's the market I mentioned, the best performing market in the region this year. Tuan will talk a little bit about why that's happened and the good and the bad side of that. We look at the market and think about those tariffs. Total US exports from the Vietnamese listed companies is 1.5%. With the balance, with all of the rest coming from the domestic economy. We've talked about the emerging market upgrade. I won't talk about it now, but we have released a big white paper, which you can access through the QR code. And of course, these presentations will all be available for anybody who can give us their email address later. So the equity market, which I mentioned, has tested its supporters over the last few years. You can see on the left, here is the price to book ratio going back 10 years. And you'll see that 1914-15 was where we were coming out of a political crisis. And then 2020, where COVID occurred. And you can see we're down at those sort of levels of valuation of companies. Meanwhile, on the right, you can see that against its peers, you've got along the bottom index there, the growth of profits by companies and the valuation of companies. You can see that Vietnam is both amongst the more rapidly growing companies and the lower valued companies. And so as we contemplate the end of the last 5 years and the beginning of the next 5 years, the tariff issue is, we can talk about this later, but the current market expectation is somewhere around a 20% tariff level. So let's give an example of that. A pair of Nike shoes. Nike makes half of its footwear in Vietnam. It's a good example of one of the targets of the tariff companies. So let's say a Nike shoe leaves Vietnam at about $24 and it's transported to the US and then it appears in a US store at about $150. So if there is this notional tariff, the tariff would be on the FOB price. So let's say there's a 20% on $24. So $24 goes to $30, and $30 appears in the store in the US at about $150. So that's the equation that people focused on Vietnam have to deal with. And I happen to know in some of these sectors, the deal has already been done down the supply chain, and people have agreed that they can accept that, different people around the chain. So that's why we say the trade reshuffling is probably a livable situation for Vietnam. And the other point to remember here is it's not just what happens to each country, it's what happens to them in comparison with each other. So it's a relative comparison. I probably haven't been able to give put flesh on the bones of this second point, which is the biggest. We call it Renovation 2.0. What fired Vietnam out of its poverty in the 80s was Renovation 1.0. And what's going on now under the political leadership of To Lam is something we expect to be as significant, although the conditions for Vietnam are different, but to be as significant in the way the domestic economy works as those Renovation 1.0 reforms. And really, finally, on the back of this, the market looks pretty under-demanding the investment environment. And I'm now going to pass to Tuan, who's been leading Vail for a while now. He had an early history with Vail. He can explain how he's put Vail back on track in 2024. We've had a few issues in the early months of this year, but basically Tuan has upheld the 25-year record of 10% odd a year returns for Vail. And as Rachel reminded us recently, that compares with long-term investments in the Dow Jones of 6.4% a year since 1900. So we're doing okay. Tuan, another 80 years to go. Over to you, man.
Thank you, Dominic. Thank you, everyone, once again, for your being here today in the room and online. Dominic already presented a long-term outlook, outlook and prospect of Vietnam, and also its short-term challenges. So how we bring that view into the Vail portfolio, how we reflect that long-term prospect and deal with the short-term challenge. Let's recap a bit about the fund performance by the end of 2024. We had a new team. We had restructured the portfolio in 2024. And at the same time, we got a good capital return in the year. And we level the performance gap on 3-year horizon. On longer term, longer horizon, investment horizon, Vail did deliver consistent long-term capital appreciation to Vail shareholder. However, short-term pose a challenge, which is the tariff threatening. That's caused market volatility to global market, not only Vail. Since Trump took the office, the tariff fears were looming. And as the result, we have seen that foreign investors continue to sell Vietnam stock market in the first 5 months of 25. Within 5 months, they have net sold $1.5 billion US dollar. And it was after $3.5 billion US dollar net sale in 2024, a huge amount. But the question is, what stock the foreign investor have been selling? They primarily have sold blue chips, fundamental-based stock like banks, mobile world, or FPT, and these stocks primarily owned by Vail portfolio. They are our core holding. This phenomena created a heavy pressure on the Vail portfolio in the first 5 months of the year. Looking at the bigger picture, within the first 5 months of 2025, only 2 sectors outperformed the index, which were conglomerate and property. And they were driven primarily by just a few names, a few stocks only, which were Vingroup for the conglomerate and Vinhome and Vincom Retail for the property. The remaining other sector were lag behind in terms of performance. Now we look at a bit deeper into the root cause of our underperformance. We saw that Vin-related companies, including Vingroup, Vinhome, and Vincom Retail, explain for 4.2% of our underperformance, or 60%. Only VIC alone accounted for a half of our underperformance. And if we exclude all the Vin-related companies, the other stock in Vail portfolio suffer a net selling by foreigners at $1.1 billion US dollar within just the first 5 months, out of 1.5 billion US dollar net sold for the whole market. So this created heavy pressure on our portfolio in short term. I believe that many of you want to hear more about VIC. We realized that over the last 5 months, a half of our underperformance was mainly attributed to Vingroup. The stock has been roared on the back of some stupendous infrastructure ambitions. In May 2025, the company supplied the whole market with Robozo on VinSpeed, a national high-speed railway, 61 billion US dollars, 60, and complete in 5 years. And this news indeed excited the retail investor. Then the stock performed significantly strong. By now, we have to admit that we don't have a clear view about VinSpeed, about how Vingroup can finance for this project. We don't have enough information. We don't know how they will develop and operate this project. We don't have a view about the commercial aspect of this project. But instead, we have a much better idea on Vinhome and and Vincom Retail. We know about their land bank. We know how they develop their land bank. They have good track record. At least we know our analysts can forecast their yearly earnings. So that's why we are much comfortable to own Vinhome and Vincom Retail in our portfolio. Vinhome is currently our top 3 holdings, and we also have a decent chunk in Vincom Retail. To wrap up my discussion about the fund performance, I want to say something that within the first 5 months of the year, all institutional investors in Vietnam suffer from this outlier. And it's not only about value. But it's not the first time we've seen this. And we have seen this happen before. And to our experience, the right way for our fund to deal with this short-term situation is to uphold our long-term investment thesis and to stick to our strongest conviction, and the result will come. So what are VALE long-term investment thesis? We focus primarily on the consumption and infrastructure investment themes, which are primarily driven by domestic market dynamics. And these long-term investment themes are currently supported by a few strong catalysts. Firstly, it's about the private sector rising. Private sector is emerging as the most important economic driver for Vietnam in coming years. This sector will grow much faster than any other. And private sector are currently encouraged by the top leadership, by the government, to engage in big, important national projects, and that will create value not only for them, but for the country. Second is the legal unlock process. It's already happening and will speed up even more in coming years. And in our portfolio, we already see companies in our portfolio benefit directly from this legal process, the legal unlock process. And in future, we are looking for new opportunities coming out of this. The third catalyst is technologies, which expect to have Vietnam to live up and grow in coming years. And together with a rising private sector, this will provide a strong catalyst for tech-driven companies. For example, companies like FPT will expect to receive a lot of tax benefit in R&D, a lot of government support in R&D. They will move firm and faster in new areas like AI, semiconductor, and data centers. Banks also invest a lot in technologies, and they will find some way to have incentive from this technology focus. And the last catalyst is the IPO comeback. We are having EM upgrading imminent. The stock market is providing value and growth, and we have a rising private sector. So we expect to see IPO wave will come back in a couple of years. Our investment strategies, our portfolio reflect closely our investment strategies. We have 81% of the portfolio focused on private companies. 63% of the portfolio in allocating to consumer include sector like banks or retails. Our infrastructure allocation include company operate in transportation, aviation, or seaport operator, or construction, or company or sector that directly benefit from the infrastructure improvement, like real estate sector. And over the last 5 months, 19% of our portfolio have been shifted to these new catalysts. Currently, we have three strongest conviction in our portfolio, which include bank, retail, and residential. Bank is the backbone of the economy, and it will benefit first and foremost on the supportive economic policies. And in Vietnam, because the bond market is still immature, banking credit is dominant in the capital market. So bank will benefit the most from the rising private investment and the increasing of infrastructure spending. Also, a healthier property market is crucial to bank also. The recovery in property market will have to address the NPL issue, will accelerate lending to mortgages, and to improve NIM, net interest margin, for the banking sector. For the retail sector, this is directly benefiting from the rising middle class in Vietnam and the shifting from traditional wet market to modern market. And because in Vietnam the retail market is very fragmented, so this shifting process in the retail sector will have to create new champions, and we expect it will be mobile world for the grocery market or FPT retail for the pharmaceutical. For the property sector, we have seen the property market recovered since last year, and we expect to see it happen. It continue to happen. The real estate market is benefiting from a few key catalysts. The first one is continuing easing monetary policy. The interest rate is currently still at a lowest level. Secondly, is the infrastructure improvement. There will be more express highway, more ring road, more big airports, and in future there will be the high-speed railway go across 20 key most populated cities in the country. And the last thing is the legal unlock will also very helpful for the property market as well. Currently, we are underway in a few sectors like consumer stable or energies, because it's simply because we see that they lack a role. Today, I want to bring to you three investment cases in Vail portfolio. The first one is Mobile World Group, a diversified retailer. We like Mobile World because we believe in Bách Hóa Xanh story, the grocery chain of Mobile World. Bách Hóa Xanh is at the turning point to profitability after many years struggling to find the right template. They are expected to open over 400 new stores this year. And Bách Hóa Xanh coming to profitability and expansionary phase is a crucial moment for the company. And together with its already established position in its traditional segment like consumer electronics and IT and mobile phone, we expect the company will grow well in coming years. We expect to see that Mobile World will grow their earnings by 54% in 2025 and achieve 27% CAGR over the next 3 years. Vinhome, this is the largest property developer in the country. Vinhome distinguishes itself from the remaining player thanks to its giant land bank and its superior track record. If other property developers, they normally try to find good location close to existing residential area. Vinhome has the ability to create its own good location. Thanks to its very comprehensive ecosystem, they can create a new urban town, very big one with full amenities, full services from school, healthcare, to shopping center, to even theme park. And the 23% discount to RNAV here is calculated upon the pipeline we knew. The project that we have specific timeline for development. If we count the potential land bank for Vinhome, this number is even higher. And despite of 94% rally within 5 months this year, Vinhome relative valuation compared to peer is still cheap. Is still cheaper. The last name is Techcombank, which is our favorite stock in banking sector. Techcombank is the #1 innovative bank in the sector. It's on a tech-driven asset management platform that allows it to benefit from low funding costs, highest CASA ratio, and very strong retail portfolio. It's also it's a dominant player in the digital corporate bond market for retail investor. And in coming time, they have two catalysts to happen with Techcombank. The first one is the IPO of Techcombank Security, which will re-rate the valuation for the bank. And secondly, Techcombank is the dominant candidate to establish the first digital asset exchange, which will allow the bank to explore a complete new potential market and products. So now I come to the discount. We all know that the discount is the big concern for shareholders and to us. And we have taken many initiatives over the last few years to address the issue. The board has focused on the share buyback to address the discount. We have spent over $300 million over the last 5 years, and we will continue to do so. But we have to reckon that there are a lot of things need to happen to address the discount issue in a meaningful way. So finally, I want you to bring home just a few key points. Firstly, VAIL is a domestically focused portfolio. We have very little direct exposure to tariff. And secondly, we focus on strong conviction that contribute to and benefit from the biggest reform in the country over last 40 years. And we are repositioned to ride the unprecedented high growth period. That's the end of my presentation. Thank you for your listening, and we welcome your questions. Thank you.
Right, are there any questions? There's a mic somewhere that will come around. And if you could actually please say who you are and whether you're an individual investor or you come from the company or the press, that would be very helpful. Thank you.
Hi, just on the buybacks and more directly on flows. Sorry, Council Kilpammy. When you're funding buybacks, how are you looking at the liquidity of the underlying stocks and making sure that your sales are not themselves depressing and causing deratings? And what's the sort of valuation dispersion like within the index between the more liquid ones, which have maybe been a bit more subject to FDI flows, against less liquid?
Did you hear that?
Thank you.
Sorry, I find it quite difficult to hear the question.
Okay.
Sure. Just regarding the buybacks, you are obviously quite a sizable player in terms of AUM in the market. How are you managing liquidity of your positions that you're exiting to fund the buybacks? and making sure that your selling is not itself depressing the share price rating? And with regards wider FDI flows, is there any dispersion between the more liquid stocks being depressed on a valuation basis by those FDI outflows against less liquid ones, or is it more or less moot?
I think I got those interesting and quite detailed questions. So first of all, what is the funding of the buyback? What is that doing to stock prices? So Tuan had a chart which showed that foreign selling of $1.1 billion on a small range of stocks caused underperformance in our portfolio. So you can see there is an impact there, but that's not an impact from us. And so the thing to bear in mind is that the turnover on an average day is either side of $1 billion, and funding the buybacks within Vale is a small part of that, and I would say it's not worthy of consideration. There's a subsidiary factor, which is that Vale, as you might know, has a leverage, so it has the capacity to borrow to fund the cash flow aspects of that. Your second point was, I think, was perhaps answered by Tuan's chart, that foreign activity is focused on a certain number of stocks, foreign investment activity, because those are the stocks that foreigners like. And as we might be aware, those are the stocks that in many cases have reached their full foreign limits. So it does tend to be focused in. I think of our 80 core large stocks, how many of those would be at their foreign limit? Maybe no more than 20. So you can see that foreign interest is quite focused. I hope that answers your second question. Thank you.
Peter Jenkins, what percentage of the portfolio is in companies which are unquoted or private and likely to IPO?
Percentage of company what?
Unquoted.
Privately owned and likely to undergo an IPO.
Let me take that one again. The experience we have over a long period of time is investing in quote unquote unquoted investments or private investments or private equity is not generally successful for us. What has worked, and I think this is your question, is where we can do pre-IPO investments. So people will come because Vale Dragon is an interesting name in the market. If you're going to do an IPO like Techcombank Securities, which is that last slide, you might want to get people like Vale on your register to give some stability as you go through that IPO process. So that's a function of the IPO pipeline, which, as you can see on Tuan's slides, is one of the 4 areas of focus in the portfolio. But as of right now, unquoted investments like 2% of Vale.
Yes.
Isn't it? Very low. And we're hoping to build up an IPO share, but at the moment the IPO market is pretty flat, and it's pretty flat partly because the Vietnamese market itself has been a little bit uninspiring for the last few years. Thank you.
I know, Tuan, there's a question at the front here. If there's a mic.
Private investor. I think the last time I saw you, Dominic, which was probably about 5 years ago, I think you was talking about the possibility of the government coming out of the, what do you call it, the frontier division. And what has happened on that front?
Thank you very much. That's a question about Vietnam becoming an emerging market, I think, isn't it? Yes, ceasing to be a frontier market and an emerging market. So we have produced, Will and the crew produced a long document addressing all of this. But we could simplify it by saying there's certain people in the world, and they're index companies like Morgan Stanley, MSCI, and FTSE Russell, and they pass comment on whether markets are eligible or not eligible for particular flows of foreign capital, right? So widows and orphans shouldn't be invested in frontier markets, but widows and orphans can be invested in emerging markets, for example. And Vietnam has been grappling with this process for a long, long time. And I think, to your point, it's still not an emerging market, which is why we refer people to our comments on it through another document, because we feel we don't really want to bore people anymore. Why has that happened? It's a function of policy issues and technical issues, if I can say that. So the policy issues are things like, how comfortable is Vietnam with foreign involvement in its own companies? You know, ironically, Vietnam is one of the most successful countries in the world at bringing in foreign manufacturers. And in fact, I think it's clearly the most successful in East Asia, possibly one of the most successful in the world, because the Vietnamese have got comfortable with the fact that if you want to build a factory in Vietnam, there's an industrial zone, and there's access to a workforce, and here's a port, and you can bring things in, and you can manufacture them and guarantee the power. And people, by the way, they don't strike too much, they work hard. But in the markets, it's a different thing, because the companies that are listed on the markets are Vietnamese companies, and they're Vietnamese franchises, and they're Vietnamese businesses, and Vietnamese technology, and Vietnamese ownership, and Vietnamese households. And there's an unsettled philosophy towards how involved foreigners should be allowed to be. That's the policy issue. And to be frank, Vietnam's not alone. Japan used to be the same. China used to be, still is the same. All Asian countries, and please, Asian people here, don't get me wrong, but I would say that Asian countries are quite xenophobic, which isn't racist, but it's xenophobic. It's philosophically unsure about the role of foreigners in their culture. So that's the policy issue. The technical issue is how you buy and sell in stock markets. I don't know if anybody here has tried to buy and sell directly in the Vietnamese markets. It's quite difficult. You've got to open up an account. You've got to send your money in advance. It's got to be changed into Vietnamese dong. You know, there's 38,000 dong to the pound. How do you work out how many pounds you've got left at the end of the day? You know, and only then can you place your order. So it's unlike other markets in the world. It's what they call a pre-funding. And there are reasons for this. They haven't quite managed to remove the pre-funding. And so that's viewed as a technical barrier. Yeah, so it's a combination of policy and technical. You know, if you speak to people on the ground, they will say that the process of becoming an emerging market is underway. And that's the thing, is it's a gradual process, and I don't think it happens overnight. So the more optimistic people would say that in September of this year, the FTSE group will acknowledge that Vietnam is a pending emerging market, and that's the first sort of acknowledgement in the train, and then there'll be more to go after that. So it's a process of a few years.
I would like to add a few things to Dominic's question about the EM upgrading. I know that investors are quite disappointed with the very long process of EM upgrading in Vietnam. But there are a few things to need to confirm. Number one is the government commitment. It's now not only the idea or the opinion by SSC, State Security Commission of Vietnam, but by their boss. They have a clear and specific plan to get Vietnam upgraded to EM status. And we all know that the frontier market is no longer exist. People don't care about Vietnam with the frontier market. They think it's about in terms of an EM market to be. And in foreseeable time, we expect to see fully upgrading Vietnam to the secondary EM market, and it can happen in September or March next year. For MSCI, it concerns other technical issue. For example, foreign limitation, like Dominic have mentioned. So it takes longer time. But in Vietnam, we recently launched the new stock, the KIX, the trading exchange. And at that time, people expect the CCP to be introduced as well, but it's not. However, it's reflect that the government, the SSC, is doing on the CCP and are trying to address all the technical issues to make sure that Vietnam can be upgraded to EM in the coming time.
Can I just ask, before we break for lunch, are there any questions online?
There are. Thank you very much indeed. I was just going to come to those. If there's no other questions in the room, I will jump to a couple of those online. Very engaged and a number of topics around the same thing. Perhaps if I just read them out and then you guys can judge who is best to respond. The first one's around dividends. What is the current dividend policy and payout ratio? And does the board see any changes to this in the near term?
Okay, can I take that now?
Of course, yeah.
We currently don't pay a dividend. As I have mentioned, the board has been considering a number of options in terms of looking at the discount, and dividends is obviously one of them. The yield is reasonably low on the Vietnamese market, and this would mean paying out a capital, which has tax implications for certain investors in terms of paying dividends rather than going for capital growth. And in the past, we have taken the view that by not paying a dividend, we can reinvest in the stock market. But as I said, we are sort of, we consider all options, and dividends is obviously something that we would consider. I don't know, Charles, if you have anything else to add to that?
No, I think we're keen to get feedback on whether people would like dividends or whether it becomes a problem for them.
And on that, actually, over lunch, please do come up to us and give us your views on anything that you would like us to consider.
That's perfect. And those online can also let you know their views on the dividend as well. I guess the second kind of topic was around your holdings and what is the average holding period for your portfolio companies? And has this really changed in light of the recent market conditions?
The average holding period?
Yeah.
Normally, we have a long-term view with our investment holding. So on average, we have an average holding period for 3 to 5 years. But in actual, we used to have company that we held for 15, 19 years. So we are very long-term. We committed to long-term holding within our portfolio. Nowadays, when the market have a lot of volatility and quick movement, some holding we will have a shorter average holding period. But on average, the average holding is 3 to 5 years that reflect our long-term view about investment.
Thank you. And a lot of the other questions I think you've touched on either through the presentation or through the Q&A. I will return to the room. Are there any other questions in the room that you'd like to ask? Thank you.
Wahid Kasser. You mentioned your average holding is between 3 to 5, and then you mentioned 15 to 19. There's a massive gap between the two. So what is the rationale, or what is your consideration for holding that for 15 to 19 years?
It will come back to Dominic when he found the company. We at that time we have limited opportunities. We invest in ACB or Vinamilk, RE at the time, and those companies are the blue chips that the first listing companies at the time, 2000 something, and they are actually were in our portfolio for a very long time. ACB is still now our top holding in the portfolio. So the average holding on ACB 19 years. So that's part of the the establishment of the fund and our conviction with the company. For now, the average holdings when we buy and hold companies, we calculate that it's around 3 to 5 years. We think that is reflecting our long-term view about company.
Thank you very much indeed. And I think that ties up nicely to 1:15, Dominic, which I think was your...
Thank you very much, everyone. And please do come and speak to us over lunch. Enjoy. Thank you. You didn't have the Q&A.
Thank you very much indeed to those joining us online. That concludes the annual general meeting. Please do provide your company with your feedback. Thank you once again for your time today.